Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right. Sorry I've been absentee here. I've been in the room with subscribers every day and the whole thing, but I've been traveling a little bit. I was under the weather for a hot minute there, but I'm back at the desk now here in lovely, dreary New Jersey, back with another market webcast. So let's talk about, if you want to talk about where we've been, it's pretty simple. Compression, expansion on the hourly chart, okay? We talked about, and I've been talking about with subscribers for weeks now, look, if they can't deal with the 9-day and they can't deal with the 20-day and turn something that is a buy dips market on a longer extended view into a sell rallies market, well then they're just going to, the bulls are going to keep winning these consolidation periods, dragging every week short, every short that has been short, and adding to some god-awful options thing or whatever they've been in forever. And it's not to besmirch options. They're great if they're used properly, but you just know there are people out there that have just been fighting this from 4,700, and they just, they puke them up, they run it higher. They suck them back in. Charlie Brown, you got Lucy in the football. Here, we'll go to the hourly chart. Lucy gets the football out. It's going to be different this time. No, it's not. Lucy's got the ball out. It's going to be different this time. No, it's not. And that's been going on now for a long time. For a long, long time. And we have been short at periods of time, but the shorts have just been for a trade. And we're not swing traders or position traders or anything like that. But, we do hold things overnight when they're working. When the market gets its tightest, when it gets its worst, and Thursday was just an absolute nightmare as far as the range of the regular session, things like that. But those days when it gets the toughest, when it gets the most compressed, when you're ready to bang your head into the wall, and I've literally done that a couple of times this month, that's when the expansion comes. And I can't stress enough. And, what are we doing now? We're compressing again. I can't stress enough how you need to fight the urge to overtrade, fight the urge to bang a square peg into a round hole, and just try to be patient. Just try to be patient. I didn't take a lot of trades on Thursday. Actually, for Thursday, we were red on Thursday, which, look, is going to happen if you trade. We're not gloriously red. It was less than like 4 handles. And that's what you have to avoid, is getting utterly banged up. But what we did do was draw a line in the sand at our risk marker, which is 50.12, and just say, look, if they can't convert that, it's going to look just like here when they couldn't convert 53.54. It's no different. It's the same damn tape. And what do you get Friday? You get expansion up out of there. You got a little, craziness there, 830 up and down. But the craziness to the downside couldn't deal with the marker down at 12 and 13. And as long as it's not dealing with that, then you get, then the bears are shot, the shorts are running, or they're continuing to fight, and they're dragging you behind the bus, and you get Friday happy fun time, which is what we call it in the room. That's just when it's like, look, we're going to run this thing up all the way into the close on a Friday, and we'll figure out the rest of it on Monday. So what about today? All right. Well, we're compressing, number one. Hourly midband, 50.42 and change. You got volume weighted average price, 50.43. Proprietary moving averages to 50.44. So everything's jammed in just like it was on Thursday. Are we going to have a miserable compressed day like we done on Thursday? I don't know. Neither does anybody else that knows what they're talking about. I mean, it looks like we're probably gonna. But let's wait and see what price does. So for the bulls, you got to deal with 48. Just like you had to deal with 50.20 back here. Now you got to deal with 48. Bears, you have a new weekly pivot here. 5,009 spot 42. You need to get down there this week. You need to convert it and close with something with a 4 on it. Because as long as we're trading with stuff with 5s on it, the market is going to magnetize to the upside because you're going to get performance chasing, and everybody's starting to get the feeling that something bigger is happening and they are getting left behind. That is just the reality. Just the reality. And if you're one of these people that is sitting around every day waiting for the moon to crash into the earth, let me give you a hint. When the moon does crash into the earth, nobody's going to get paid anyway. Nobody gets paid. You're right, and you're dead. So waiting for that big shoe to drop every day is not a way to be consistently successful in the markets. It's not a way to grow your account. That doesn't mean you should always be long. There's shorts. There's shorts. It's a nice short on Monday. It's a nice short on Friday. You know, they were looking like they wanted to try to convert some of these compression areas, and that's fine. But what you have to say to yourself is, when it gets down to the 9-day, when they can't convert weekly pivot, when these things start to go wrong, you have to make the adjustment and say, look, I'm just a trader. I'm just trading here, okay? I'm not suiting up for one team or the other. I don't get anything extra at the bottom of my account statement every month because I fully supported the Bears or I fully supported the Bulls. It doesn't work that way. It is your job, it is our job to figure out which side of the highway are we supposed to be on. Get on that and go. You want to be the windshield, not the bug. There's a big difference. There's a big difference. And there's a lot of people out there that are being stubborn and they're consistently being the bug. And as they're hitting the windshield, we go up a little bit more and a little bit more and a little bit more. It happens sometimes on the downside too, but it happens much more often on the upside, and that's really what we're seeing here. They are lulling the market to sleep with these big compression moves, and then they're taking them out of it, taking them out of it, taking them out of it. The one thing I'm surprised about right now is that Europe is not the one that's just saying, oh, let's go, and popping everything out at 2 o'clock, 3 o'clock in the morning. I think if they were, we would be running up even higher because then people wake up in the morning and start to put money to work and feel like they really missed out. So just do not overtrade in these compression zones. Do not fight the tape. You can be short at times when price dictates it, but it's just for a trade. And that doesn't mean be long, set it, forget it, walk away. That's idiotic. But it does mean that you can let those trends work in those up moves a little bit more than you can the shorts. Look at the market for what it is, not what you want it to be. Trust me, the market doesn't care what you want it to be. The market is what it is. Price is what it is. All right? I don't mean to be preachy today, but I haven't been on here in a while, and I feel like there's a whole bunch of you out there that need somebody to grab you by the shoulders and shake the hell out of you. All right? Will it come in eventually? Of course it will. It always does. Stop anticipating it. If it actually does come in for real, there'll be plenty of time and plenty of handles for everybody to get involved. Until then, go with the flow. And don't overtrade in these compression zones. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.